VIX is a very classic sign or an indicator of fear, volatility, and a classic emotional as well as a sentiment indicator for the markets. Now, why is VIX very significant? We were discussing that there is a cause and effect relationship between the prices or the Nifty 50 or the overall market with respect to India VIX. So as you can see that VIX is also called as a volatility index. Initially, when the markets go into a correction, the VIX starts to rise up or show signs of increase. But then once VIX goes out of into a disproportionate kind of a zone, that's where VIX plays its effect on the overall market sentiment. And the more the VIX rises, the more is the expectation that the market goes into a fear or maybe a panic kind of a scenario. So over the last many days, we've seen the VIX spiking almost 50-51% in the last couple of days specifically. Now, why is this important? The three zones for India VIX is very significant. So a VIX generally termed below 13 or 15 is considered to be a very calm market, a very stable market, where you expect that the markets go into a very decent kind of a trend, very slow, gradual trend. A VIX between 15 and 25, where we are right now at the current zone, indicates that it's an uncertain market. And of course, given the kind of geopolitical news flow, we are in that uncertain kind of a zone. But more important is that when the VIX rises above 25, if that happens, say hypothetically over the next couple of days or maybe by next week, then we go into a very sharp corrective phase for the market, something which happened, if you remember, in 2020 and even prior, big corrective zones for the overall markets. That's why mapping VIX is a very, very important indicator, because the more the spike in VIX beyond a certain zone, in this case, for example, 23-25 levels for the India VIX, that's where the market goes into a very sharp dizzy for itself. Now, what we've also seen is that when we looked at the historical zones, when the VIX corrects or rises very sharply, like what in the last couple of days, we've seen 50% jump plus for India VIX in the last couple of days. Now, when that has happened, what is the effect of that on the Nifty in the next 3 days, 5 days, and then subsequently in the next 15 days to 25 days? We've done a statistical analysis on all the historical times when the VIX has spiked up more than 50%. Apparently, in the next 3-4 days, the index still remains into a negative pressure for itself. So even if there's a bounce back, there could be a chance or a case that the markets can come back into a corrective phase, because on an average, we've seen that the next 3 or 5 days, percentage change for the Nifty is on the negative side, 1.7 to 1%. But subsequently, in the next 15 to 20 days, we've seen that the health of the market gradually improves, and you see the Nifty closing at an average of at least 0.5% to 2.5 to 2.6%. Subsequently in the next 15 to 25 days respectively. So that's why VIX, as a very short-term effect, plays a significant role in terms of damaging the index trends, but over the medium term, the effect of the VIX starts to subside significantly. The most important part is what happens when the VIX starts to subside, and how much can the VIX correction lead to a bounce back onto the indices. So assuming if there is a scenario where the VIX drops by 10%, then on an average, we've seen that the Nifty over the next subsequent 5 days jumps up by a margin of 1.5%. If VIX in the next 1 or 2 days falls by 15%, then there is a very strong chance that the average return for the index is almost 3% on the positive side. And subsequently for 20% and 25%, if the VIX drops by that kind of a margin, then you're looking at the Nifty showing a probable 4% to maybe 6.5% kind of a bounce. So the percentage drop in the India VIX going forward is extremely significant to determine how much can the Nifty bounce and lead to a change of rally for itself.
Very interesting. Kunal, we're likely to see a bounce today, but is there a possibility that we retest that level of 24,300?
There is a very strong likelihood. So as I said earlier, that there is a case where when the VIX starts to go into a big spike, there is an initial case of a bounce, but in the next 3 or 5 days, there is a retest of the previous low which happens. It happens almost 80 to 85% of the readings which we've seen when the VIX spikes to a certain disproportionate level, like what we've seen the last couple of days. And that's why a retest of that 24,300 could be a very strong likelihood. But in many cases, the retest of the previous lows on the indices have actually been termed as significant phases where the markets have bottomed out, and that's where you start to establish a new trend in the making. So if in case in the next 3 or 5 days, the VIX starts to recede, but the market goes into a double test of the support of 24,300, that's a classical sign that the markets have bottomed out, and that could be a very strong bottom in place for the short to medium term.